Hi guys, good afternoon and welcome to Money Control. I am Karunya Rao. With me is Manisha Gupta, and today we will talk about the rising dollar index and how it impacts a host of currencies and commodities. But before we talk about individual commodities, why is this happening? The sudden spike, 20-year high is it? Yes, 20-year high for the dollar index. Talk to us about what's responsible for that. Is it the slew of central banks coming together and back-to-back rising interest rates?
Well, yes, it is. The way the interest rate hike has started or begun in US, markets do believe that this is one area to start parking your money because the interests are high there. And with everything that is happening across other countries and economies also is bothering. So what is your safe haven right now? It clearly has not been gold. It is not equities as well. We've seen a dollar actually take that position there, and is the reason we've seen these constant declines coming in. Today is yet another day when you are looking at a fresh 20-year highs for dollar index. 110.79 is the level until now, but the markets do believe that 111 is not too far away. There have been various reports suggesting that 113 also is a possibility if we see the pain continuing into the global markets.
So, who stands to be impacted? I know for a fact that the British pound has taken quite a bit of a hit, but what other currencies are impacted?
Oh, well, pound sterling is trading at a 37-year lows rather, and that is also because of the pain points within UK as well. There is a belief that because of the power crisis, we are looking at industry, production, all of that go down. In addition to that, the growth is absolutely absent there. We have seen the currency decline because of that as well. So you have pound sterling, which is trading at a 37-year lows versus the US dollar. There is the Japanese yen trading at a 24-year lows versus US dollar. Canadian dollar, New Zealand dollar also are trading at a 2-year lows versus the currency, and our own Indian rupee also has at an all-time lows in this year itself, and we are trading on the weaker side of the range even now. So whether the pain can continue more, perhaps it can, yes. So the 75 basis point rate hike is factored in. What about November and December? There are 2 more rate hikes now pending in this year. So are we looking at 50 basis points in November? Then the markets would believe that okay, aggressive rate hike is done. If it is 25, then you will see a big run coming in for various asset classes. If it is 75 yet again, then you know the pain continues, and you will continue to see US dollar gain up and various other asset classes not do well. So much will depend upon today on the guidance going forward and what will markets start to price in for November.
You know, typically last few months the guidance has not been very clear. They've said, oh, we're monitoring all the data and we'll see how it goes. So definitely, because this is priced in, the next 2 meetings will be very important. But what happens for commodity buyers and traders, because a lot of this is happening in dollar terms?
Yes, and all commodities are dollar denominated, so it's a pain, yes, there. And again, as I said, 75 basis point rate hike today is factored in. So while we have seen a lot of decline in the last 1 week, 10 days, a fortnight, but today is a day when you have seen a relief rally in some of them. Take a look at the crude oil prices, 2.5% higher right now. I mean, there's no reason for that really, because there's no demand coming in right now. But the markets do believe that 75 basis points is done, and let's now watch out for the guidance going forward. So day after tomorrow onwards, it's going to be on CME on the probability of the rate hike for November. I think every bet would be there. But barring crude oil prices, take a look at gold, 29-month lows. Silver is not able to hold around that 19.5 mark. Copper prices trading at a 2-week lows. Aluminum 17-month lows. Zinc 2-month lows, and I could go on because that's.
But you know, this is not, like you said, it's not demand triggered, it's macros. So for traders, perhaps, like many of these attractive commodities, especially precious metals, are available at attractive price points. So will buying pick up from these levels?
It is also, because we do understand that on-ground buying in precious metals is stronger right now, especially in India. You have Diwali coming in next month, so the imports are on the higher side, and then you have Christmas internationally, New Year's, you get international gold buying also happen at that time. The ticket size might go lower because there is inflation concerns everywhere, but yes, these are lucrative levels. People are buying on these lower levels here, but as I said, as I keep reiterating, it will much depend on how we are looking at the month of November from here on.
And any other metals that could see possible buying, or other commodities, not just metals?
A relief rally, if you're looking for that, then it might come in case of aluminum, zinc and copper, all 3 of these metals. But are we looking at a runaway rally? We are not.
We're not. And right now all eyes on dollar index and all eyes on the commentary coming in later tonight from the US Fed chairman. 75 bips, like we said, already factored in by the markets. Thank you so much for watching. We'll be back again tomorrow with a fresh update on commodities.